are few things as emotive as food prices. Everyone needs to put food on the table, and food price inflation has made it more difficult. The World Bank has a food prices for nutrition project which shows that worldwide around 2.8 billion people, or 35% of the global population, could not afford a healthy diet in 2022. Global food prices rose early in 2022, driven by disruptions from the COVID-19 pandemic and the war in Ukraine. In South Africa also, we were not exempt from the increase in the prices of food commodities, and farmers and retailers also struggle to cope with load shedding. The Competition Commission published the latest version of their Essential Food Price Monitoring Report and warns that food prices are too high for a household earning a minimum wage. Assuming that someone works at the minimum wage of R27.58 for 8 hours a day, 5 days a week, for 4 weeks a month, that gives a total income of R4,412. The Peter Marek-Split Economic Justice and Dignity Group's Household Affordability Index puts this into perspective. They track the cost of a monthly household food basket as purchased by women living on low incomes. It includes the foods and the volumes of these foods which women living in a family with 7 members actually buy. They find it costs on average R5,255. BFAP's thrifty healthy food basket comes in at R3,771 for a family of 2 adults and 2 children. The short story is that households would need more than one minimum wage earner to make ends meet. We know that South Africa has around 2 million minimum wage earners, and the broad unemployment rate stands at 44%. That leaves lots of people vulnerable. Affordability is clearly an issue, but the Commission also says that food prices have not decreased as inflation and fuel prices have fallen. They say now that cost pressure is less, prices should fall faster, but they don't, and food industry companies are making a solid profit again. Economists know that prices are downward sticky. It goes up easily, but it doesn't just fall again. There are various good and bad reasons for this. Unfortunately, the Commission does not give many details about how their research was conducted. They calculate the retail margin as the difference between the retail prices and producer price divided by the retail price. In the case of white bread, brown bread, sunflower oil and wheat, the producer prices are SAFEX prices. And we'll all agree that a lot happens with wheat between the SAFEX price and the price of a loaf of bread on the shelf at Pick n Pay. Wandile Silobu quickly responded to all this on X and said that there is a 3 to 6 month lag between a change in the prices of agricultural commodities and the prices of products in the retail trade. It would actually be interesting to know how often prices change and in what increments. This is going to differ between formal and informal markets. In formal markets such as South Africa, retail prices change less frequently, but in larger increments. It has to do with market structure and so-called menu costs. I think there's still a lot of work to be done, and it ties in with the debates around the zero rating of VAT on many food items and the issue of tariffs on imported poultry products. Hopefully the Minister of Finance will shed some light on those issues in the mini-budget. Meanwhile, if you're a student struggling to put something healthy and affordable on your plate, check out the online resources of the Association for Dietetics in South Africa. They have excellent recipe ideas. Thank you for tuning in to this week's edition of Economics Weekly with me, Waldo Krugell. Drop a comment or a question below and join me again for next week's episode as we look at news that makes our economy tick.